Hello, welcome to the European Open Briefing for Tuesday, July the 4th. I'm Rafi Berjan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we do have a generally stronger dollar. It rose yesterday on the back of stronger than expected ISM manufacturing PMI out of the US. It is a little bit weaker today. We are seeing a broadly firmer yen this morning, mainly due to some risk of concerning another missile test launched by North Korea. We had the Reserve Bank of Australia policy meeting this morning. They held rates unchanged, but they also maintained their neutral stance. That put the Aussie under some pressure. And the euro is also struggling a little bit, even though we did have some positive Eurozone PMIs yesterday. The pound also fell sharply yesterday. That was due to a weak PMI for the UK, though the pound is a little bit firmer this morning. And in commodities, oil has ended a straight run of 8 sessions of gains. It's a little bit down this morning, although overall oil is looking much more positive than it has in recent months. But let's start with the dollar-yen pair. We can see that sharp gain that started early on Monday. It extended well into the US session following the release of the ISM manufacturing PMI, which came in at 57.8. That was a near 3-year high. It beat estimates of 55.2. The sub-indexes, we saw strong employment growth, although prices paid fell in June, which doesn't bode well for inflationary pressures, but traders appear to ignore that. We did see 10-year US Treasury yields rise sharply after the data, as the expectations of a Fed rate hike later this year for a third rate hike, the odds for that rose slightly. We do have some risk off, mainly on the back of that launch by North Korea of another missile test, which apparently fell into Japan's exclusive economic zone. And this latest test strike comes ahead of the G20 summit in Germany on July 7 and 8. And so it probably indicates that North Korea will be at the top of the agenda once again. And also it's worth mentioning that trading is expected to be rather quiet today, as US markets will be closed for the July the 4th Independence Day celebrations. Let's move on to the Australian dollar now, because we did have the RBA meeting earlier today. They held rates at 1.5% as expected, but there was some traders were expecting perhaps a slightly more upbeat view on the economy by the central bank, and this is mainly because we did have some signs of improving labor market in Australia, but the RBA was very much neutral, although they did acknowledge that labor market has been a bit stronger recently. They said consumption growth remains subdued and wage growth remains low as well, although they did say that inflation should rise gradually as the economy continues to grow, but the lack of direction by the RBA saw the Aussie slipping by around 0.6% against its US counterpart, falling just above the 0.76 level. We also had retail sales data, which actually beat estimates, but didn't have much of a reaction in the currency markets. It rose. The Aussie rose briefly before falling after the RBA's decision. Retail sales were up 0.6% in May, beating estimates of 0.2%. Moving on to the euro now, because we did have very good PMI data for manufacturing sector for the Eurozone yesterday. The IHS Market Manufacturing PMI was revised up slightly to 57.4 in June. That's the highest in 6 years, and it underlines the growing evidence that the Eurozone economy is recovering at a much stronger pace, and that would potentially put the ECB on track to start withdrawing from its massive stimulus program later this year, or most most likely early next year. So it puts the July and September meetings in focus, where they may possibly start debating their exit. But the euro, though, it's potentially down due to a technical correction given the strong recent gains, as well as the stronger US dollar as well. Single currency is currently trading at around 1.13, just below 1.1370. It's slightly below the 1-year high we saw last week of 1.1445. And to the year to date, though, the euro remains the best performing major currency so far. It's up 8% against the US dollar. Moving on to the UK pound, because the pound did fall sharply yesterday after the UK manufacturing PMI. The market CIPS manufacturing PMI came in at 54.3, missing forecasts of 56.3, and there still doesn't seem to be any evidence that the UK exporters are benefiting from the weaker pound. And yesterday, of course, we had other strong PMI readings from other parts of the world, such as China, Japan, all of which enjoyed strong growth in June, but the UK is seeing rather more subdued activity in the manufacturing sector. The pound is currently trading at 1.2940. It's down from last week's highs of just about 1.30 level. The pound still is benefiting from broader support from the growing hopes that the Bank of England will be raising rates at some point later this year, given the hawkish views of some MPC members. Although yesterday we did have one of the Doves, Gert-Jan Vlieg, arguing for a rate against a rate hike, saying this is an environment where a premature hike would be a bigger mistake than one that turns out to be slightly late. Moving on to commodities, in particular gold and oil. Oil, of course, yesterday finished the day higher for the 8th straight session. Last week it was boosted by a drop in US output as well as a decline in the number of active US rigs. So that did shift the sentiment a little bit in favor for crude oil, although today we are seeing both WTI and Brent crude meeting technical resistance at the $47 and $50 barrel levels respectively. Gold has recovered a little bit from yesterday's 7.5-week lows. Gold has been coming down sharply since June, mainly due to improving risk-on sentiment and more recently rising US yields. It did hit a 7.5-week low of $1,218 an ounce. It's currently trading around $1,224, with that risk-off relating to North Korea slightly helping gold prices this morning. And looking at today's economic calendar, it is going to be a fairly quiet day. The main focus later will be the construction PMI out of the UK and dairy auction in New Zealand, and the market manufacturing PMI out of Canada. We also had the Riksbank, that's Sweden's central bank, policy meeting today. They held policy unchanged with the repo rate at minus 0.5%, although the Swedish krona was a little bit weaker as the Riksbank maintained its bias to cut rates up until mid-2018. That's the earliest they expect to be raising rates, but they said that they could potentially cut rates up until that point. That's it from me. Thank you very much for watching and have a great day.